So let's understand the current solution. But before that, we will understand that how do we prepare the balance sheet and what items are comprised in the balance sheet. Okay. Followed by that, we will understand that what is the solution to our current problem. Okay. I am using the traditional form of balance sheet. Okay. To make it more clearer. So generally there are three types of items in the balance sheet, and I have written all those broad items which will be classified in the balance sheet. Okay. Based on that, I have used different types of colors for different three different terms. Okay. So first of all, let's start with liabilities. Okay. So liabilities are the amounts which a business entity has to pay off their suppliers. Okay. Let's say suppose we have a business of furniture. Okay. Now to make furniture, we need raw material in form of wood logs. Okay. So what happens when you purchase some wood logs from your supplier or some other person? Okay. So what you said to him after purchasing or after receiving the wood logs, that you will pay off the amount due in at a later point in time, let's say in 1 year. What happens, that amount payable becomes payable after 1 year. Now that amount will be considered as liabilities. Okay. And that is generally known as accounts payable. So I will be giving example for each of the terms. Okay. And you can write it down this example for future reference also. Okay. So that you will not get confused that how did we arrive at the correct choice at the end of the explanation. Okay. So furniture business, so for making understand each of the term, we will take example in respect of business that is dealing in furniture, selling of furniture. Okay. Now what is a capital? Okay. So this amount, you can understand then why I have written liabilities with red pen, because we have to pay it in a future. So we can infer from the liabilities that it is amount that we are not supposed to like it. Why? Because it incurs the expenses, like it is likely to result in paying off some other person from which we have received goods or services. Okay. So that is why I have written red pen. That is why I have written liabilities with the red pen. Now in terms of capital, it is the investment of the owner of the business. Let's say suppose Mr. A is the owner of business. Now whatever amount or whatever, let's say any type of investment which Mr. A has brought into the business to start the business, okay, will be considered as capital amount. Okay. Let's say suppose Mr. A brought cash as well as his bank balance, okay, to start the business. Okay. So the capital is the amount of investment which has been brought by owner to start the business. Okay. At the initial level as well as in the middle of the operating of business also. Okay. Now liabilities have been clarified and capital also. Now let's come to assets. What are assets? Let's say suppose you have sold furniture to your new customers. Okay. Now what happens? The customer says that you are a new businessman, so I cannot trust you initially. So what I can offer you that I will pay you the amount, okay, against the furniture I have bought from you in 1 year's time. Okay. So that is what our customer has said to us. Now what will happen when we will have any type of amount that is receivable from our customers? Okay, then such amount will be considered as assets. Okay, so we we refer that amount which is receivable from the assets or which is receivable from the customers as accounts receivable. Okay, now what happens? So this is the whole explanation. So I'm writing down the reference that why we have accounts receivable in asset side, because of furniture sold on credit. Okay, here also we have wood logs purchased on credit basis. Credit basis means the payment will be paid and the payment will be received at a future point in time. Now what happens in asset side also, there is one item also included, that is inventory. Now what is inventory? Inventory is the raw material. Okay, it is the raw material which has not been processed yet to be converted into furniture. Okay, so inventory can include raw material, work in progress, like it has been semi furnished, or we can say it is in a semi processed form, like neither finished nor raw material, semi processed. Okay, inventory can also include finished good also, which could not be sold to the customer during the current year. So that is why we have inventory on the asset side in the balance sheet. Okay, so we have derived our solution, that on which of the statement we will list our merchandise inventory account. Okay, so what is that statement? It is balance sheet. Okay, so the correct choice is A. Okay, you can write down this example so that you can get a clear idea that how did we arrive at how did we arrive at this solution, that is choice A. Okay, that's all for our solution. Thank you.